Hey Donna, thanks for coming back. We have Donna, the certified financial advisor, with us again to give us an update on the CARES Act. So last week we talked about, in general, the different options available for individuals as well as businesses. And today we're just going to get an update on what's been going on. So,
Okay. Yeah, and it's only been 7 days since the last time we talked, but I feel like I've been blogging every other day since then with just keeping people updated on what's going on. The most dramatic and the most changes that has happened is primarily the PPP. That's the program, the Paycheck Protection Program, that most people are most excited about because essentially, as long as the conditions are met, it's essentially free money.
mhm.
And just a reminder that the conditions mean whatever amount that you receive from this PPP loan, 75% of it, at least 75% of it has to be used towards payroll expenses within the next 8 weeks. And if the rest of it can be used towards your lease or and such, but at least 75% has to go towards payroll expenses. And if not, then it will be an actual loan and you will have to pay it back plus a little bit of interest. But as
Um,
long as the conditions are met, it's essentially a forgivable loan.
So how does it work? Because what if you have employees that are working, but you just aren't able to pay them? Can you like use some of that money to pay back, like some back pay? Or it has to be for hours moving forward?
It has to be for payrolls that are dated within 8 weeks of receiving the money. So I
Oh,
guess, so I'm guessing if it was back pay, as long as it was paid within those 8 weeks of, the clock starts once you receive the money for 8 weeks.
okay.
So the payroll has to be for then. And payroll is W-2 income, basically, for businesses.
Okay.
Okay. So last week when we talked, it was April 21st. We had just found out that the first round of $350 billion was basically gone. It was completely allotted for, and they were still processing these loans to disperse the funds, but it was completely allocated. In the last week, we've heard a lot of large companies receiving these loans. There's been obviously a pretty big public outcry and backlash for that. Some companies have returned the money, not all. They have up until May 7th to do so. So that's kind of interesting, which means basically there could be a third wave of funds that are able to be pushed out because they have up until May 7th. There's been a couple of changes to this process since it was such a nightmare the first time. So first of all, any publicly traded companies will probably be denied just because of the backlash. So if you're a publicly traded company, you're probably not going to get the PPP. Your best bet is go with the EIDL, the EIDL. Okay. And the rest, and then the remaining changes has to do with how these applications are being processed, because there was also a lot of backlash on certain banks favoring larger clients than smaller ones. So of course they got the bigger loans because the banks had their personal banker call them and such. So submissions now will be processed individually. Previously they were batch submitting applications. 15,000 at a time or more, trying to get these processed, but now it would be processed individually, just because you can imagine the bigger banks will be submitting 15,000, 20,000 applications at once, and the smaller bank is processing maybe only 100 at a time. They're going to get squished down, right? So submissions will now have to be processed individually, no batch processing. What I've heard is banks that are processing these applications faster than average, whatever that means, they get locked out, they get timed out. And so they have to wait and resubmit it again. So it's a pretty labor intensive process, it sounds like. Another thing that they're doing is they're limiting it so that each lender will be able to, they will only approve up to $60 billion per lender. So
Okay.
this also takes away a competitive advantage. If you were with a larger bank, BOA and Chase, there's probably, it's thousands and hundreds of thousands of applications, right? And the amount is going to be a lot higher than the smaller banks. So there's a competitive advantage there. So they're limiting it to $60 billion per lender. So if at this point, it's almost a game at this point, right? Because it's almost like it makes more sense to apply your PPP loan with a smaller bank. You probably have a better advantage at this point. But I don't know, because it's already been a week. Well, it's been 2 weeks, 3 weeks basically since they first opened the applications. And now that the second round of funding is here, which is $310 billion, it seems like they're still processing the backlog from the first wave of applications. So if you remember, April 3rd was when applications first opened for businesses. I think they're still processing applications from April 4th, possibly.
Mm-hmm.
Okay. I don't want to discourage anyone from applying, but I do want them to be realistic on, the chances of getting the funding, because there are talks of a third wave of money coming in. Last week, it didn't seem like that was going to be the case. They were just going to do the second one and kind of be done with it. However, since then, the optics just don't look good for this program, politically speaking. And so it's possible that legislators are actually talking about a third wave or maybe even a fourth wave. So even if you haven't submitted your application yet, it's not completely, lost hope. You might as well still do it and then see how far the funds go.
Okay.
So they started yesterday. The bank started processing applications, pushing it to the SBA yesterday. It's been 24 hours since then, and I think they processed 100,000 applications in the last day. So it's moving a lot slower than it has the first wave. So at this rate, it looks like the funds will all be allocated within the next 4 or 5 days.
Mm-hmm.
So just kind of stay tuned to the bank that you guys have your applications. Something that's interesting to me is because of this debacle of submitting applications, a lot of people are submitting multiple applications, right? They'll submit it at this bank, then this bank, and they'll just kind of see who gets them the money first, which makes a lot of sense. However, there's also concern that the SBA potentially will kick out applications that they've received duplicate applications from. So if you submit it at Chase and then you submit it at your local bank, the SBA will kick it back because it's been submitted twice. So there's also that concern to kind of balance. So ideally, if you can submit it and then make sure that whoever is processing your application gives you a call before they actually hit the button to the SBA, then that would be best, because then you have the time to go to the other bank and take off your application then. But I don't know how realistic it is at this point where everyone's using fintech, right, financial technology, where everything is processed via electronically or the cloud. So that's also a concern as well. But I'll come back to I want to come back to that May 7th deadline. So the individuals that receive PPP the first wave, if they decide to return the money, maybe because they are a large publicly traded company like Shake Shack or the Lakers, like large companies, they have up until May 7th to do so. So today is April 28th. I'm expecting that the funds will be fully allocated definitely within the next week. But all hope is not lost, right? Because the companies that returned their millions of dollars, it's almost like there's like another pool of the return pool money that can be pushed out. So like I said, I don't know how realistic it is, but if you haven't applied at all yet, but I wouldn't not do it just because you just never know.
What about, because last time we spoke, you talked about the PUA, the EDD unemployment. So today's the first day to start enrolling in that?
Yes, yes, the application opened today. And reminder, this is only for California residents. So it's for California businesses. It's for business owners that it really targets business owners. They call it gig workers, independent contractors, or for people whose unemployment benefits already ran out. So maybe you had claimed unemployment benefits prior and it's already run out. You can now claim this as well as for individuals who don't have a sufficient work history. So if you're a California resident and you're not claiming any unemployment insurance right now, this might be a good option to look into. This provides for an additional, I think, $167 a week. Could be more based off of your earnings history. And this is on top of that $600 a week as well. So the application is through the Department of Labor website, or is it through the EDD, Employment Development website? Either way, I'll make sure to get the website application to Nancy, and you can share it with everyone.
Okay. And then last week since most of the programs like the EIDL and the PPP, we're talking about apply to businesses, and self-employed individuals also run businesses but don't technically have employees.
Right.
So can they still benefit from those programs?
The technical answer is yes. So if you are sole proprietor, the first day you could have applied for the PPP loan was April 10th. That puts you a week behind all the businesses. So from a realistic standpoint, they're not even processing those yet because they're still processing the backlog from the first wave, which is probably those that have submitted April 4th. So even if you were like the first person in line for sole prop, you're going to be pretty far back, to be honest.
Mm-hmm.
However, I still think it's worth it because you just never know how, you never know when that spigot's being turned off. The only difference I would say with the sole props is, you're right, there is no employee technically. So how do you calculate how much loan you're going to get? How do you calculate how much you pay your employees? The way you calculate the loan, it's the rule for businesses is your average monthly payroll expense. For self-employed individuals, they're looking at your Schedule C. So you're going to have provide probably your last tax return with the Schedule C on there. And then in terms of how to qualify to have that loan forgiven, this part is interesting because there has not been any guidance on how to prove that that money went to the employees, which is technically you, right? Mm-hmm. And only you. So they haven't come out with any guidance on exactly how to show that yet. But my guess is, well, two thoughts I have on this. One is it'll probably be pretty loose in how they'll look at it because it just makes sense. The sole prop is just you. So if the money comes in, it's going towards payroll, it's going towards you, right? So I think that's probably what they'll lean towards, but we don't know at this point. And my second thought to that is, depending on when that spigot runs out, depending on how much more funding this program is going to receive, it's possible that sole props won't get anything because they're so far back in the queue that the funds run out before then. So if that happens, I guess they don't even have to come up with any guidelines on how to forgive that loan. But I don't want to completely deter anyone from applying because you might as well. You don't hurt your chances by, you definitely won't get anything if you don't apply. Mm-hmm. And if you apply, you might have some chance. So I would still apply.
Mm-hmm. And one thing I also wanted to point out too is like Donna, she also blogs daily, it seems like. So
every few days, but there's been so much just recently that it's all day long.
Yeah, so there's also going to be more information available on her website as well, which will provide a link in the bottom. So thank you so much for your time. Every time I talk to you, it's always been so helpful and informative. So appreciate your time.
Of course. Thank you very much. Appreciate this opportunity.